Hello everyone, and welcome back to another episode of Simply Wall Street's Market Insights. My name's Michael, and this week we'll be discussing the opportunities in the turbulent transition to greener energy. The bear market in renewable energy stocks is now in its fifth year. It started with sky-high valuations, but the fundamentals have since deteriorated. As we know, stock prices peak when expectations are at their highest, and they usually make lows when expectations are at their lowest. So, with expectations closer to the lower end, it's time for an update on renewable energy stocks, as well as some nuclear stocks, which have continued to gain momentum recently. Specifically, we're going to have a look at the state of the clean energy transition, what it means for the sector, and how to find opportunities within it. If you don't want to hear some news stories from last week and you'd like to dive straight into the main piece, check out the chapters below where you can skip ahead. For those of you who do want to hear the news stories, let's dive in. First up, Meta just made a nuclear move. Quite literally. It signed a 20-year deal to buy a staggering 1.1 gigawatts of nuclear power from Constellation Energy. That's enough juice to fuel its AI-heavy data centers and, more importantly, to keep the Clinton nuclear plant alive and possibly expanding it. This is Meta's first formal dive into nuclear, and it's a loud vote of confidence in nuclear energy as a reliable, low-carbon solution for the tech world's power-hungry future. Expect names like Constellation and SMR developers align with big tech to attract even more investor attention. Meanwhile, in Japan, Toyota made waves by helping take a major supplier, Toyota Industries, private in a $26 billion deal. The price came in lower than expected, which surprised investors. But this could just be the beginning of a shakeup among Japan's sprawling conglomerates. Cross-shareholdings are under scrutiny, and similar buyouts could unlock hidden value elsewhere. On US shores, the Trump and Musk feud hit DEFCON 1. After a clash over tax legislation, Trump threatened to axe federal contracts tied to Musk's companies. The fallout was Tesla's shares sinking over 14%. And while SpaceX was still booming, Musk said it was on track for $16 billion of revenue this year, US government contracts, which made up a quarter of last year's revenue, are now hanging in the balance. Across the pond, fintech giant Wise plans to ditch London for a primary US listing. It's another blow to the London Stock Exchange and a clear sign that high-growth companies are hunting deeper capital markets and more active investor bases. And finally, China's rare earth exports curbs are putting Europe's EV engine in a chokehold. Auto giants like BMW and Mercedes are scrambling for workarounds as parts shortages start biting. That's more margin pressure, delayed rollouts, and a nudge towards rare earth-free tech. Alright, now let's dive into the main piece. Let's zoom out and take a look at the big picture. The clean energy transition. Are we barreling towards net zero, or are we stuck spinning our carbon-emitting wheels? A year ago, energy heavyweight Vaclav Smil dropped a sobering essay suggesting we're nowhere near the net zero finish line, and maybe never will be. Smil's not one for sugarcoating. He says that despite decades of pledges, global carbon emissions have increased by 54% since the Kyoto Protocol in 1997. While it's difficult to estimate how much the increase would have been without implementing green energy ideas, it's clear that our reliance on oil, coal, and gas has continued to rise. According to Smil, we're halfway through a 53-year journey to net zero, but with emissions still rising and global energy demand outpacing renewables, we are not on track, not even close. So let's talk about why. First off, the scale is monstrous. Just to swap out gas-powered cars for EVs, we'd need an extra 150 million tons of copper, which is 7 times what we already dig up each year. Add to that 80 million kilometers of grid upgrades and investments equivalent to 20% of annual GDP from wealthier nations. Oh, and critical minerals. Cobalt, lithium, and rare earths. Those come with their own environmental baggage. Then there's geopolitics. Global coordination on clean energy is fractured. Some countries are pulling back just as others are pushing forward, and economic headwinds, especially in Europe and China, are reshuffling priorities. Suddenly, energy independence and national defense are crowding out climate goals. Meanwhile, interest rates are higher, and renewables are front-loaded with costs. Unlike fossil fuels, where you pay as you go and upfront costs are lower, wind and solar projects need massive funding upfront. That makes financing more expensive when rates rise, and we're feeling it now. Oh, and remember peak oil? It used to mean peak supply. Now though, the conversation is about when demand will finally hit its high watermark. In saying all that, it's not all doom and gloom. There are some green shoots among the solar panels. Here's the bullish case. Many of the weaker renewable energy players have already been flushed out. What's left? Well, companies with stronger balance sheets, leaner operations, and more realistic growth models. First Solar's PE ratio has collapsed from nearly 600 down to just 13.5. That's a massive reset in expectations. And here's the kicker. Global investment in clean energy is still projected to hit a record $2.2 trillion in 2025, including nuclear energy investments. That's double what's expected in fossil fuel investments. Why? Well, because governments still crave energy independence. Renewables are often the fastest way to get there, especially for countries without big oil and gas reserves. And add to that a wave of innovation. Solar panels, battery storage, green hydrogen, it's all advancing. The timelines are murky, but breakthroughs could tilt the entire sector. So now let's talk about the wild card in this whole energy game, nuclear. It's officially back on the table. Countries like Denmark, Germany, and Spain are rethinking their anti-nuclear stance. Trump has signed orders to speed up nuclear development in the US, and the big tech companies are leading by example. Still, one big question remains. Can new reactors actually get built on time and within budget? Well, historically, that answer has been no. But with renewed interest and funding, we might finally see a shift here. As for small modular reactors, or SMRs, they are also gaining traction. There are dozens in the pipeline, but only 2 in operation so far. If SMRs prove scalable, they could reshape the energy grid. So, where should investors be looking? There's no neat industry label for clean energy plays. They show up across energy, utilities, industrials, and even semiconductors. Your best bet is either looking at ETFs holdings or advanced screeners like the one we have with targeted keywords like solid-state battery, modular reactor, microinverter, or HVAC transmission. But remember, this isn't 2020. The buy anything renewable playbook doesn't work anymore. Today, due diligence matters more than ever. Look for companies with real profits, strong financials, and exposure to essential infrastructure. Prioritize those building out grid systems, battery tech, or transmission lines, the stuff the electrified future has to run on. And stay realistic on growth. Most of these businesses won't scale like tech stocks, so valuations and the price you're willing to pay should reflect that. Also, government policy can work both ways. Energy policy is country specific, and it can act as a headwind or tailwind, so try and stay up to date on relevant energy policies. And lastly, be conservative when it comes to unproven technologies. Innovation can solve big problems for the world's energy needs, but a lot of experiments don't work out. Making wildly optimistic claims is a great way for companies to raise capital from those investors with a dose of fear of missing out. So, how can Simply Wall Street help you? Well, you can use our advanced screener tool to filter for ideas that meet your criteria. We've got some pre-built screeners in the article, so check them out. Next, you can check out other investors' narratives in the community section to see where they see opportunities and where they see the risks. And lastly, you can use our portfolio tool to stay on top of your investments and make sure you're exposed to the trends that you want to be invested in. And that's where we'll wrap up this week's Market Insights. Whether you're betting on solar, nuclear, or something in between, just remember, the clean energy transition is not dead, but the road ahead will require precision, patience, and a bit of grit. Thank you so much for listening to this week's Market Insights. If you have any feedback, please do let us know. Until next week, invest well.